François Dekker, partner at Searchlight. Earlier in December, you put a bid on Opus. Why does Searchlight want to acquire Opus?
So we've been monitoring Opus for the last couple of years. We think that the management team has done a great job at creating one of the leading players globally in emissions testing. More recently, we've had some discussions with the management team, and based on those discussions, two things have really become apparent with Opus. On the one hand, Opus's core business, which is emissions testing in the United States, is a business that's facing kind of long-term decline. And that long-term decline is driven by two factors. On the one hand, as battery electric vehicles continue to penetrate, those cars will not require emissions testing, so that market will start to decline. I think the other driver for the decline in the market is regulatory. And a number of states in the United States are phasing out their emissions testing programs. So as a result of these two drivers, that market will be declining over time. Now, the management team has done a really nice job of identifying some growth opportunities to offset that trend. Most prominently, that's a division within Opus called IVS. But that division is still quite small, and it's almost like a little startup. So IVS currently generates less than 10% of the group's revenues, and even less in terms of a percentage of operating income for the group. And IVS is, as I was saying earlier, it's effectively a startup that will need a lot of investments going forward to realize its full potential. Investments could include, or will include a significant investments in more sales force, because IVS is competing against a number of very large players. And while IVS has good technology, they're still very small relative to these large players. So it will require a lot of investments on the one hand operationally, but also as recently announced by the company, they will probably need to do more add-on acquisitions to create kind of a business of sufficient scale to compete against these large competitors. So based on these two dynamics, and based on our discussions with the management team, it became apparent to us that it made much more sense for this company to be in a private setting as opposed to in a public market setting.
And why did you raise the offer?
So in the beginning of December, we put forward an offer to shareholders, and following that, we had a number of discussions with key stakeholders around the company, including the board and key shareholders. And based on those discussions, we were pleased to put forward an increased offer. So now we're offering more than 50% premium to the trading levels of the stock prior to we made the announcement. We're offering a multiple of 18 times operating income. So we're putting forward a very attractive proposition to all key shareholders.
And we learned earlier during the week that the biggest shareholder accepted your bid. How do you plan to further develop Opus if your bid is accepted by the rest of the shareholders?
So you're right, earlier this week, RWC accepted our offer, and it's important to note that with RWC accepting it, we have the largest shareholder supporting our offer. We have the board obviously unanimously supporting our offer. We have all the equity analysts supporting the offer, as well as the Swedish Shareholder Association. So we have a lot of support for the offer, and we feel very confident that we will be successful. In terms of further next steps, it's really along the lines of what I was saying earlier, that we already focus a lot on our attention on and capital on investing behind the IVS proposition to really make sure that business can achieve its full-time long-term potential, and that business can then offset some of the negative growth trends that it's seeing in its core business.
And why should shareholders accept your offer?
I think there's really two reasons why the shareholders should accept the offer. On the one hand, as I was saying earlier, we're offering a very big premium, more than 50% relative to the trading levels before we made the announcement. It's an 18 times operating profit multiple, which is very high. Just in itself is high, and especially high when you look at the fact that the company's core business is kind of on a long-term decline. So it's a very attractive price. I think the other thing to note is that there's actually a risk to people not accepting the offer, because I think two risks there. One is if we don't achieve the 70% acceptance threshold, you could see a very significant downward pressure on the stock. Since we made the announcement, more than 10% of the stock has traded We think largely to merger arbitration funds that are looking to make kind of a short-term profit. These guys will likely look to sell the stock pretty quickly because they're not long-term holders. So that would put a lot of downward pressure on the stock. And the other reason is if we get above 70% and we close our offer, those people remaining in the shares will be in a very illiquid security. And being in an illiquid stock is really quite risky, because if you're looking to sell your position, you have no guarantee that you can get out, because there's a lot of or hardly any liquidity in the stock. So we do think that there's we're offering a very attractive premium, and the downside is quite material for shareholders, given if we don't get to 70%, there will be a significant downward pressure on the stock, and even if we get above 70%, those remaining in the stock will be in a very illiquid security.